up, question or win? What do you
Good
have
morning.
this morning?
I thank you. I have a win that leads into a question. So we have one of our electricians went out on an estimate and converted the job there while with the customer. And once he completed the job, she gave, it was like a, I'd have to look, I think it was $1,500 little job, residential job, and she gave him a $300 tip. And that leads to my question of how is everyone tracking tips and dispersing them? We're using House Call Pro and we have Gusto for payroll, but I have to be, how I'm tracking it now is I just write it down, tip for Andre, $300. And then when we run the payroll, Gusto has a column where you can add either cash tip or I forget what they call it. It's cash tip or something else. But anyway, that's our win. We're very proud of Andres. He's killing it.
Yes.
Wow. That's amazing.
Yeah.
I asked him, I says, what kind of service you give him for $300? And I was like, that probably was inappropriate.
That is too funny. Anybody here have experience with that where you're in an industry that also, some of your guys get tips, how you distribute it? Any feedback for Laura there? Fred.
Yeah, so I'm also an electrical contractor. The only tips my guys got before were it was all cash tips. So I didn't keep track of anything. I've never gotten a tip where it was written into like with my invoice. If that kind of sounds like what you had, right?
Well, in House Call Pro, when the electrician goes to send the invoice and the customer is looking at the screen to pay and sign, it's just like when you go to Dutch Brothers or Starbucks. They're like, do you want to add a tip?
All right. Yeah. I couldn't tell. I've never
It
had
says like 5%, 15%, it has like a percentage. The customer's able to add the tip at the time that they're processing their payment.
Yeah. So I've never had it happen where we were processing a payment like on a credit card or they wrote me a check. It was always cash tips.
Yeah.
So I haven't keep track. Like it's like it never happened for me. They'll tell me they got a tip, and I'm like, hey, good job.
Yeah.
Fletcher, do you have feedback here?
Yes. Hi, Laura. We do not track tips. I'll be honest with you right now. It's one of our incentives for our crew members to actually do a great service. And what we like to call here is over deliver for our customer. So I'm always asking, even in our team meetings when we do our shout outs, because our shout outs lead to like employee of the month and other incentives. But when we do our shout outs, we ask, how did you over deliver for a customer this week and things like that. So when our team gets a tip, if it's a cash tip, I do the same thing as Fred just mentioned. I go, oh, great, you got a tip. I don't even want to know how much it is because I want to self-incriminate myself and know that you got a tip and, and there's taxes and things involved in that. However, our crew does know if a customer does pay more with a card, that therefore we do now have to track that because now it shows in our expenses that we received the tip. We just take that additional cash and we roll it in as our responsibility. We don't make our crew members worry about it. We still pay them the tip. I know I may be losing some money on the credit card percentage because we still charge for the credit card too. But we mark it as a tip. When we put it as a tip, we don't put it. I might be incriminating myself. I'm trying to find the best way to say this. It's criminal, but it's a tax write-off for me. And let me just put it that way.
Okay.
A write-off is a loss because I'm giving it to him as a tip.
Mm-hmm. Thank you.
Yep, and some of that goes into, and that's why I mentioned the employee of the month because we do employee of the month or giving cash in or like gift cards and things for those who get the most reviews and things like that, and we sort of curtail it into that cost.
Yeah.
So I'm incriminating myself, but hey, it works.
We won't tell, Fletcher.
Well, I think under the current administration, up to $15,000, there's no tax. It's not taxable income.
No taxable income.
I don't know that for sure, but I believe that's the case.
Yeah, but if your electrician is doing a great job at least 5 times, now he's got to pay for tips for the next one. So
yeah. Thank you.
Yeah. Dale, I know you use House Call Pro as well. I saw you put in the comments that you do track it, that you have an account in both QuickBooks and House Call Pro
Yep.
that tracks those numbers, and then you pay it out of payroll.
Yep.
Michael, what feedback do you have here?
Well, Laura, if you use Gusto, they do have another category for bonuses. It might even be a tip category in there as well that you could just slide the money to them through Gusto. Because if you're taking credit cards, you got to account for all the money, especially with your billing. And I don't know if you have to tax it or not. It'd be up to them at that point.
Good to know. All right. Any other feedback on this? Laura, any other questions on it before we move on?
That's it. I mean, you all basically validated the 10 different directions I was going with it. I mean, we're using House Call Pro and we're integrated with QuickBooks Online. So there is an income account for tips. And then the Gusto app allows you to pay out the tip to whoever, received it. So I'm probably just going to stick with that for now. My other thought was if the customer wants to pay a tip, it has to be in cash or maybe a Venmo directly to the tech. But I don't know. I think it's set up pretty well through House Call. So I'm probably just going to go with that.
Yeah, I think the more complicated that you make it, the less likely people would be to leave a tip. And right now it's so easy, which is probably why they're getting more tips. Kind of same thing, same principle there, guys. When you're asking for reviews, like the easier that you make it, the more likely it's going to happen. And so I think that if it's working that way, Laura, I'd probably keep it.
Awesome. Thank you.
Yeah. Alexander, I see your hand up. Question, comment?
I've got another win. So we had started an addition and we ran into some big issues. They had an unpermitted patio and they had 2 unpermitted sheds in the back. And we're working in Denison. It's one of the most strict permitting cities in our area. Like they're just super strict. And so they had a real issue with that. But so we thought the entire deal was going to fall through, but the clients were really motivated and they pulled out a personal loan and we redid the bid so we can pull the permits for the unpermitted work and then move forward with the addition. So I'm really glad that we kept that deal together. Another thing is we were going to start on an entire house remodel. And it's going to be about $130,000. So again, this is a really big job for us. I'm partnering up, but they just purchased the plans from us. We had to do custom plans, of course, but they just went through and purchased those. So we're working on those plans. So it's pretty hopeful that we'll get started on that and we'll be able to begin on that build, which would be our next biggest project. So those are some wins, and yeah, we're doing good.
That is awesome, Alexander.
Yeah.
Congratulations. Keep us posted. Hopefully next week you'll be telling us you won that job.
Yep, hopefully.
Yeah, sounds super promising. That's great. What other questions or wins or thoughts do we have going on today?
Actually, I got a question today.
Yes.
And I'm wondering if any contractors have already done this, but this company my family's been running for 45 years, and I've been doing it full time for the past 4 years now, 3-4 years. And we have been constantly spending our own money just to keep everything rocking and rolling. And I wanted to know what were some people's preliminary strategies for raising capital and possibly gaining some capital so we can start spending our money and start spending somebody else's money to make money. I know I need flush of capital, not because we're not bringing enough money, but if I want to grow, I need to bring in capital. So what are some preliminary things you all did to get capital? And what were some things you were thinking or strategy you were taking? Like, okay, if I need to grow to a certain amount, that's how much I'm going to need. How did you figure those things out?
Nice. That's a great question. Mr. Russell, go ahead.
probably, let me think how long ago. It would have been last August. We did an SBA loan to purchase a building, but I wouldn't even go down that route unless you've got an enormous amount of time to invest in the loan process. It's like a full-time job to go through that loan process, and it's going to take a couple of months. It ended up working out for us, and we were able to purchase a building with it. But on the front end of the loan, there's a lot of risk because you have to pay for appraisals and environmental studies and on and on and on and on. I mean, we probably kicked out over almost $30,000 before we closed on the loan. And that money all gets lost. It doesn't get lost, but you don't get to recoup any of that if you don't actually close on the loan. So it's a long time to get from start to finish, and there's lots of moving pieces, but it did work for us, but it was really time consuming to do. But because we were relatively new in business, which you wouldn't have this problem, it was the only avenue we could go without having a long established history of tax returns, basically.
Thanks.
Nice. Mr. Mordhorst, go ahead, Mr.
Yeah, I funded my company all off of profit and cash. The biggest thing that we did is we went back and we charged market rates were. Can you hear me?
We lost a little bit there, Ryan. Yeah, you want to repeat what you said?
Yeah, we went out and talked to our CPA, and we looked at were we charging enough or not, and we increased what we were charging in certain areas based on what the CPA told us, and then we took those funds and used them to invest in what we were doing. So, I mean, that would be my recommendation. If you don't have to borrow, I wouldn't. Just puts more issues on more stress, in my opinion, on the company.
Yeah, that's some good feedback.
Absolutely.
We would share some stuff similarly as well. The system of profit first, one of the many mantras that it probably has, is to be a self-funded business, because you utilize the storage of that money in those accounts in order to do those next investment activities as you've built up your emergency kind of rainy day fund. Then after that, 3 to 5 months of expenses are saved up in your profit account. Then you can utilize that money for other things. Not to say that there isn't a need or a reason at times to do some capital growth, but of course, ideal is if you're able to do it from your profit stores. I'll jump back in with some more later. Mr. Morgan, I think you had your hand up there. You want to add to it?
Yeah, just one thing that I know I ran into that I don't know where you bank, but I'm in construction and I was looking for loans, credit to do things. I have some building lots I was wanting to try to build, just looking for different ways to get money to grow possibly. The shortest route for me ended up being just asking my bank for a line of credit. And I wasn't sure how much I'd get. And they gave me $100,000 line of credit. So that's a quick way for at least an amount of money that can help do some things. There's a lot of other ways that I looked into, but that was the best, and the interest rate really wasn't all that bad. So that was a quick way for something.
That's great feedback. If you have a relationship with a bank, somebody either personally or business wise, I would always ask there first and just see. Alex, I don't know if you have feedback on this or another question.
I have a question for you, Fletcher. I feel like also it depends, like, what are you going to put the money towards? Because for me personally, if it's like equipment and like you're wanting more equipment to help grow the company, then like that would make sense, especially if it's something that it'll like earn its money back. But exactly in your mind, what would you use the money for?
Good question. My goal is really, because we have a ton of customers that we just can't get to in a year. So the money or the capital would be to get more vehicles and to be able to hire and train more people.
See, like, I feel like in that case, it would make more sense to leverage yourself because it'll help you complete and scale. I always think if you buy, like, for example, like a truck, if it don't pay itself off reasonably quickly, like let's say within like 6 months or something, then it's like pretty obvious you need it. But if it's something like you buy an equipment and you don't use it that much, then it wouldn't make as much sense. But for what you're saying, it would make sense for you to want to raise capital and find a way to get this to help. Yeah.
And the other thing too is we need a bigger building too. We do that as well. Right now our building can only possibly hold 10 employees and 3 vehicles. So
Alexander, that's great feedback. In fact, I'm mad at myself that I didn't think of that question before you did, because that is a great question. Yeah. And really something, anytime you're considering, like, we're not Dave Ramsey over here. We're not going to berate you and belittle you for thinking about debt or getting a line of credit or a loan. Like, that's definitely not our style. We are big believers in funding your own growth, but we're also big believers in, it's okay to make that investment if you are going to see a very quick return. If right now you are losing customers, losing out on jobs because you can't get out there quick enough, and getting this loan would allow you to bring another person on and another vehicle that's immediately making money, absolutely, let's explore all of our options. Let's do that, because we know that it's going to grow our revenue and profits. You know, we're going to be able to quickly pay back that loan. So that is phenomenal feedback, Alex. Just kicking myself that I didn't think of that. Michael, I see your hand up.
So just a different opinion, maybe a different perspective on the SBA loan. And this is anecdotal evidence and also retrospect. I wasn't smart to think about this, but it worked out. So we got an SBA loan during COVID. So it was like an EIDL. They dropped the rates very, very low to get an SBA loan during the, I'm sorry, I'm driving, so that's why I'm looking this way. During the hard economic times. So we jumped on that because it was like free money, very low interest rate, and the process wasn't too bad. We weren't building a house or building a structure, so we didn't have to do that much paperwork. If you have a CPA and your books are in line, like, it's that, and then plus a business proposal. What are you going to be using the money for? So it wasn't that bad of a process, and it really helped us with just working capital. I know you had said that your business is also very seasonal, and sometimes those first couple months when we go starting projects, we weren't good at getting deposits back then. We needed that working capital, and so that SBA loan has helped us with that working capital in that first 2 months of season during that surge. But we need to buy all the product, but we're not getting the income yet. So just another perspective on the SBA loan that we had.
That's great feedback. Nice. I don't know when you got that one, Michael, but I know during COVID, SBA loans were quick and plentiful back then. And it is true, just anytime you apply for any loan, how solid your finances are and how you're keeping track of that is going to really expedite that process. Laura, I see you nodding your head. I'm sure, with you being a realtor as well, you know this very well. What feedback do you have?
I just wanted to offer on, if you're looking, I'll share how we're approaching it. And I don't know if it's the right way, but it seems to be working. So we've been purchasing new vans for the field techs, and we're taking advantage of the section, I think it's 179, and then they have a accelerated depreciation. And this is a CPA thing. I am not a CPA. I know enough to hire a good one, and Redmond got us a very good CPA, Shane Williamson with S Corp Biz. Anyway, we're able to write off almost 100%. And the stipulation is, I think it has to be over 6,000 pounds. So your mid-size vans, your contractor truck with the contractor body. Anyway, you're able to depreciate that new purchase, whether you're financing it through a dealer or however you're paying for it. So you're basically lowering your tax liability at the end of the year because you buy this new or used commercial vehicle. So we finance through, we have Chevy. The guys are loyal to Chevy. So we have Chevy vehicles, and it has saved a huge amount on our tax bill at the end of the year. So that's how we approached buying fleet vehicles.
That's great feedback.
Yeah.
Thank you for that. Yeah, I do use that. I don't know what section it was called, but I definitely write off the depreciation of vehicles. Thank you.
Yeah.
Nice. Chris, I know you had put that in the chat, and we could read it out loud, but I think it'd be better if it came from you, if you're able to unmute and kind of add in that tidbit.
Yeah, no problem. Yeah, Fletcher, years ago, we got a revolving line of credit. I just walked into the bank and said, I need something to help us grow. And they just, ran our financials. Didn't take too terribly long, couple weeks. And they said, you can have 150,000. But the nice thing about it is you can draw it, not draw it, take 10,000, take 50,000, put it back the next week, a month later. Usually we buy it when we want to pay for something in cash quickly, like in a piece of equipment where the financing takes too long to set up or whatever. And we want to just, hey, I need to make this $25,000 purchase, and I can just swing that over from the revolving line of credit, boom. And then we know it's going to pay itself back in 6 months, 10 months, 15 months, whatever. And then we might, pay it off at larger increments, quickly or whatever. And that just helps alleviate the stress of chasing money, because you want to make a growth purchase and you're like, oh, I got 30,000 in the account today or 50 or whatever. And you're like, I can afford this, but then 2 weeks from now, payroll comes and all those regular expenses, and now you don't feel like you can. But with the line of credit, you don't have to feel like, oh, I gotta go chase money again. It's there for that purpose, for growth, really, as long as you're really disciplined about, what you're using it for, and, still staying in check with all your other numbers and, profit lines and all that type of stuff, that you only use it if it actually is saving you interest that you would have paid higher for something else. And you're because you can pay a cash discount by boom, I can just buy it right now for 25,000 instead of 29,000 or whatever. And that's what we use it for. And then pay it off relatively quickly, so you're not incurring a lot of charges. And make sure it's revolving specifically, because those are the only ones that seem not to charge you extra or have minimums and all that type of stuff, that you can just kind of in and out the money.
Thank you. Now we do have lines of credit, and we do use those lines of credit. And this sort of just raising another question I have. I don't hate to monopolize the conversation, but
It's great. Go for it.
yeah, part of the challenge we also have is retaining staff, just because it's sort of like the cart before the horse. Like, I need people so I can say get these jobs, but then when I get these jobs and then I don't have, I got 2 people out this week, 1 left and 1 is sick, so I've been working. So it's sort of the cart before the horse issue I'm having. But I'm trying to hire people who already have the skills and necessarily need so much training, but I need to have some money in the bank to be able to pay their wage. And so I've been considering, do I need a line of credit for that? How should I use my line of credit, and do I need to get some capital? So using somebody else's money is sort of funny for me. I don't like using nobody else's money. I really don't. So I'm trying to figure out how to use somebody else's money. I don't even borrow money from people. So I'm trying to figure out how to use somebody else's money in a business appropriately. So I guess that's the overarching question.
Yeah. Jordan, go ahead.
I don't have much experience with the line of credit. So Chris, maybe you have a little bit of experience with this, but when I approached our bank about a revolving line of credit, they basically said, send over your financials for your last 2 years on your AR account, and they would take an average of what your AR account is, and that average would be what they'd be willing to give in a line of credit. Is that what you experienced, Chris?
Yeah, it was actually based off of monthly revenue. It's 1 or 1.5 times monthly revenue is basically what they were doing the line of credit off of. So, but credit unions, interesting enough, I do have another line of credit with a credit union that all I had was a checking account, and I just had to link a direct deposit, and they gave 50,000 right off the bat, and that was it. And there was no money, no representative cash flow, but it's a local credit union. But so that is, and they gave 50,000 for nothing.
Hey, Chris, I have a question about with the credit union. Is you had to be the personal guarantor for that funding, and then do you have to put up asset like your home or?
I didn't no, I didn't. I do have to be the personal guarantor. That's apparently I can't get out of that. Everybody wants that, but no, I didn't have to put up the assets for that.
Nice.
I mean, that's a pretty good deal through a credit union, 50 grand, and all you got to do, I mean, it's no different than opening an account with a vendor, really. You sign like the document that says, we will come after you if you don't pay your bill.
Yeah, that was about the best I'd seen is the local credit union doing that.
There's definitely something to be said about going to a local bank. We even talk about this in implementing Profit First, that banks are businesses too. And we often think that there isn't negotiation possible, but there certainly is. They're also businesses. They want you to store your money with them. You don't have to pay necessarily pay the fees, but you can ask for what they have. And a lot of times the worst they can say is no. One thing as well I was going to add on what you mentioned earlier, Fletcher, is when using capital or other people's money like you're talking about, there are things that I and probably others would say you would never really want to use that for, right? If you have to use someone else's money or a line of credit in order to make payroll, maybe you do that in a momentary, like desperate sort of need, but there's a reason for the term of, payroll loans or payday loans, sorry, that those have exorbitant fees and stuff like that. But that should be an alarm and a warning bell. If you're having to pay necessary, like essential expenses with any sort of line of credit or things like that, maybe in the moment it gets you out of that, but don't let that just be a quick fix and a Band-Aid, but make that an alarm system that tells you, right, I need to really seriously evaluate these other things and get that resolved through fixing your pricing, fixing your draw schedules. Maybe there's some overstaffing issues, things like that, but always consider what the money is for, like you're talking about, which is a good question to have.
The reason why Bryce is saying what he's saying is because at Redmond Growth, we are really big believers in self-funded growth, and construction or service businesses are great business models for doing that if the financial management is done really right. That's why we talk so much about cost plus. That's why we talk so much about collecting ahead of the job, right? Is the stress of just sometimes the work can take a business owner's focus away from the financial management, but that can pretty much always inevitably leads to greater stress and putting yourself in a spot where you're agreeing to things out of desperation that we would really recommend not agreeing to. So, like with the people that have gotten the payroll loans that are based on, either weekly payments or maybe they're based on a factoring payment, where a factoring payment is based upon, hey, anytime you have income coming into your bank account, the bank will take a percentage of that revenue. I think I've only talked to one guy who has successfully made it through those loans. And I literally just met this guy last week. He's a client of ours. And I was like super impressed. I did not know how he did it, honestly. But I have, unfortunately, have worked with people who have had to go out of business and close their doors just because the debt burden got way too high. And so what Bryce is saying is real, is some of the most important, I think, wisdom that I would say that for everyone listening to really hang on to, is that if you are using a loan to pay to just run the business, like that should be an alarm, and let us know about it because we can help you out of that. if you are using a loan to expand a business or to buy a business, that's kind of a different thing. And that debt is kind of a different thing. And there's a way to take on debt in ways that like make a lot of sense a lot of times. But the thing you want to watch out for is like getting a loan to, you know, because you got over your head on something and you're using it to run the business. I myself have made these mistakes, right? And the takeaway that I have from them is that there's something that I wouldn't want to do again. It would be better to say, hey, let's stop and literally reset, right? Than have to go to that path, because it just adds, you know, especially if you're personally guaranteeing it, right? That adds so much burden for many years to come, even if the business is, you know, done, right? And so all that to say is, yeah, I want to help look out for you guys. And a lot of times these guys that have these funds that, you know, can qualify you for these quick loans, I would just say before you ever agree to anything, just review the terms with your coach, right? Because a lot of times they can make it sound really good and it can like sound like the magical solution. I remember like the first time I applied for some of these loans, I was just seeing what we could qualify for. And, you know, the guy came back and I broke down kind of like the interest rate and how much it would actually be. And because they like didn't tell me the interest rate, they told me like the interest number, right? And I was like, you know, found out that I was like, you guys are charging me an 80% interest rate. Like you're almost charging me double the loan. I said, I can get a better loan with my local mafia loan shark. Like literally. Like they're only charging 40% down the street at, you know, Tony's. No, I'm just kidding.
Good old Tony.
But yeah, but seriously. And so this is something I'm glad we're talking about this, and it's just something that I've seen a lot of people. I feel like it's predatory, honestly, that industry, where a lot of people fall victim to these, you know, smooth sounding sales guys who are, you know, seem like your solution, right? We can give you the money you need now. And it creates a huge additional load of stress to the point where it'd be so much better to just say, I'm not going to do that money. I'm going to just embrace the pressure that I'm under right now. And yeah.
Yeah. Yeah. And that's part of the reason why I asked that question. Not because I didn't have an idea, just wanted to know what everybody else was doing, because we're having those conversations. Like we're running out of space. Like seriously, we're all out of space. Even my board is cluttered, right? So we're running out of space. We are looking to hire new people. Just start doing group interviews Tuesday, doing shadow days today and tomorrow.
Good.
And so we're taking on the stress and figuring it out. And I was just wondering, in what ways have people prepared to get ready to grow? And what things, as I'm doing this process, what other things should I be considering and doing if I want to either get more capital or do a line of credit or things like that? Because I want to make sure I'm on the right path on growth. I know me and Travis are still working on my numbers, just because, no pun intended, is a travesty in my numbers over here. So we got
oh my gosh, that is so good.
Got a lot of cleaning
so
up to do over here. So just wanted to know how everybody was prepared, because I'm a big picture guy. So if I know what the light is on the other end of the tunnel, it doesn't make the darkness more comfortable. It just makes the perseverance more valuable. It's like, yeah, we're getting closer and closer to this light. And I know what I'm doing is going to get us to the light of this tunnel. So I just really want to know what those questions are before I start entertaining loans and all this other crazy stuff, which are on my head, but I don't want to get ahead of myself. So.
Yeah, I think some of what has already been discussed is the way to go. You know, a line of credit is good. I think the best kind of loan out there right now for business owners is like an SBA loan. And the reason why is just because a bank is more likely to give you an SBA loan because they're backed by the federal government. The terms are often the best interest, like loan terms that you can get. So interest rate is typically low. Loan terms are typically like you can get them 10, 15, sometimes 30 years with SBA loans, which makes a low monthly payment. And that whenever you're getting capital, the two things I would look at is number one, am I getting this capital to strategically expand my business in a way that has a real, there's always risk, but has it's a real high probability bet that this expansion will lead to additional revenues and profits, right? So how can you like what would be the example of a high probability bet? Well, if your lead flow and the demand for your business is consistently so high, and it's not just a season where you just got more calls because of a storm or maybe something happened, but consistently over time, over the period of a few months, you are seeing that, hey, we are at this lead volume where this is consistent, right? There's a proven track record of that data, maybe over a quarter, and we don't have the manpower we're having to turn people away or schedule people away in advance. That would be like a high probability bet for success, right? So that'd be the first thing is to look at is like, why are you getting a loan? Is it because you're already in debt or you're already in over your head and you desperately need money, or is it for expansion? And you have to ask yourself as well, why could you not self-fund that expansion, right? Is another thing to look at. And then the second thing that I'd really pay attention to is just what that monthly payment is. At the end of the day, that's what we're talking about here is never agree to weekly payment terms. I'd also say never agree to factoring. Are there people who have successfully done those things? Sure, right? But I would encourage you to talk to those people and ask them if they would want to do it again or how they enjoyed that experience, right? It's very tough. And so really look at that monthly payment, really look at the loan terms. I think the kind of loan that Chris described is honestly the best kind of loan. I don't know how much that was for that Chris was talking about, but like if you can get an SBA loan that doesn't require collateral, and you're going to have to personally guarantee it, right? But even if you personally guarantee it, even in the worst case scenario, let's say you went out of business, the SBA loans, the other reason why they're so good is because there's a lot more negotiation leverage that you can use in that. And a lot of times, especially if you're going with a local bank, I'd really recommend to develop a relationship with someone at a local bank. That can make all of the difference, literally. If you know somebody, I remember I've got a friend of mine, he's a senior VP of a bank here in town. And I remember one time he was like, yeah, dude, I think I can help you out if you need help. I'm in the business of, loaning high character people, like money. And so it's like that opportunity only came because I literally had a personal relationship with the guy. I've gotten other loans in the past, right, from personal relationships. And so that's the other thing I'd look at. It's just loan terms, who is it with? And if you can get something like the SBA, it's a lot more negotiation leverage in the event that you needed it. If you needed to say, hey, can we, just make principal payments, or can we just make interest payments? And can we pause the principal? And so, yeah, we go to Christmas parties with the branch manager of the credit union that gave us a $50,000 line of credit. Yeah. If you know an underwriter, that's a good relationship to nurture.
I know somebody.
Yeah.
All right. Thank you.
Yes. Great feedback. Appreciate everybody giving their thoughts, real world experiences. We've got a couple minutes left. Robert, do you want to shamelessly plug the workshop for next week? Remind.
Yeah, just we're doing a builder trend workshop, and it's more of a like anyone can come, right? But I want to set the right expectations. It's not like hey, here's how to use builder trend software in terms of like an onboarding, for Builder Trend, or like in general overview of what Builder Trend is. It's more of a workshop to solve issue specific problems. Recently in some of our group calls, we've had people, the reason how this came about is just we had people literally talk about, hey, you know, I am on Builder Trend, but I'm having trouble doing, you know, XYZ. I'm having trouble making sense of the scheduling. I'm having trouble, you know, doing the cost plus system on a Builder Trend invoice, or whatever it is. So it's mainly designed to solve those kinds of specific issues. We're bringing in a client that many of you guys know, Riley of Summit Home Solutions in the Omaha area. And he uses Builder Trend very successfully. We use it pretty in-depth and successfully at Power Builders. In fact, when we got on Builder Trend, we got a couple of emails from the Builder Trend staff that like, they were like, you guys are doing awesome on our software. And like, we have not helped you with this. Like, is there anything you guys need help with? Like, it was, I've never gotten an email like that from a software company where we're surprised at how well we were using their software so early. I wish I could take credit for that. I've got a guy on my team that really knew the software beforehand, and he really helped us out, right? But then I just kind of like sat with it, figured some things out, used YouTube, used ChatGPT to figure some things out. And so all that to say is that we're doing a Builder Trend workshop on Tuesday, this upcoming Tuesday. I think that's November the 11th, right, Nicole?
Yep.
November 11th, and I believe that's at 2 p.m. Central Time. 2 p.m. Central Time. So I'll be there. Riley will be there. It's just an hour. If there's Builder Trend specific questions, or if you just want to kind of observe to get familiar with the software, you're welcome to do that too. It's a free workshop for any client. And can we, okay, so Travis just put this in. If you'd like to attend that workshop, just if you could fill out the form, the registration form, just so that we know how many people are there and also the kind of issues that we can prepare to solve, then that would be great. Travis put that workshop sign up form in the chat, and then we also sent out an email with the workshop. That email went out, right?
I'll have to check with Caden, but I believe so.
Yeah, he marked it as done, so I think it got done.
Sweet. So yeah, we also sent an email out about it that you can use the form to sign up for as well.
Beautiful. Okay, team. Well, we will maybe see you on Tuesday for that workshop. The link's there to sign up. We'll definitely see you next Thursday for group coaching. We're going to close this out with a big 3, 2, 1 growth. If I could get everybody to unmute.
Unmute. Daniel Graham, unmute, buddy. I see you hiding over there in the corner of my screen.
Do 3, 2, 1, growth.
Growth.
Bye, guys.
Let's go, everybody.
Thank you, everybody.
Let's go.
Thank you very much.
Appreciate you, Fletcher. We'll see you, man.
Appreciate you, Robert. See you soon.